Hello there. Uh, it's been a while since it's been a while since I did a video, and I'm so excited to see you. Um, Look, I am always I am always commenting on the stock market, but before I go on, I'd love to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, Tim Sykes, who wrote the foreword to the book The Penny Stock Course, and finally Matthew Creta, who wrote the book Rocket Stocks. And you can find all their books on Amazon Kindle. Also, shout out to Steve Nissen, who wrote the book on Japanese candlestick charting techniques. You should check them out all on Amazon Kindle. In fact, right now, that's the book I'm reading. Let me see if I can show it to you. Okay. Let me see if I can show you. I was actually reading it. Let me show you how it looks like. It's very important that you get your education. Very important that you get your education in. You know, the thing, the point I'm trying to stress to you by making these videos and these lessons is I want you to learn. Okay, so I'm not. I don't know. Maybe it's my teaching style, but I'm hardly like sticking to like one one asset class. So I'm going to show you the book that I'm reading. I don't know if you can see it. Let me show you. So I think that was yesterday, or about a few weeks ago. I was actually at the library and I was studying these things. Now, I would understand if you're trying to get rich quick, and there's nothing wrong with that desire. But at the end of the day, nothing beats old school studying. So this is the book. I don't know if you can see it. You see it? Uh, this is the book. Okay, it's by Steve Nissen. All right. So I'm not just messing around with you. I don't know if you can see it. Right, Steve Nissen, Japanese kind of techniques. Um, Let me see if I have another book. Which other book is that? I think I have Rich Dad Poor Dad somewhere here. Mm, Anyway, right now, let me show you another book that I'm reading as well. This one. It's called Stock Market Cash Flow by Andy Turner. He's a rich dad advisor. This one. I don't know if you can see it. It's called Stock Market Cash Flow by Andy Turner. So, like, the point I'm trying to stress to you is you have to study these things, right? You have to study this game. So now I want to talk to you about forex trading. So I think about a week ago I made a forex trade. I think that was I think I did it was right here. So this is called the flagpole, right? So you can see it looks like a flag, right? It looks like a flag. So it's the same pattern that's happening here. So this pattern is called the flagpole pattern, and I got it from Steve Nison's book. So I changed the moving average. So it's moving on a 100-day moving average. So the thing about trading is you have to adjust your moving averages. Um, there are two types, right? When you're trend trading, your averages don't change, right? So like let's look at I picked like four of the best stocks for you to check out. Check this out. So if you look at the ADX, it's rising, right? It's rising now. When the green line crosses the blue line, you're not supposed to enter your trade, right? So the best entry was, I think, it was this one here, right? So the way it is you buy when this line is on the rise at the same time with the green line. Same with Apple. Now you can see it crashed from my entry position, but even though it crashed from this entry position, you can see I bought from here where the line was rising. Another example I can give you is Ford. So you can see the blue line here is rising, right? So uh, when you're trading trends, that's what you want. So you want it to rise, let's say by 10 points, ideally by 10 to 7 points. Now this one has risen about 6, yeah, I think about 6 points, yeah, roughly 6 points, give or take. 15 minus 22 is about 7 points. So it's a good one to trade. I think this is Ford Motor Company. The other one is I think Jacobs Solution Incorporation. So you can see from the blue line here, 21 minus 28, that's about 7. So you want it to rise about 10 steps, ideally with the green line. And then we also have breaking news. Bitcoin has hit new highs. I haven't found any other buy signals as of yet right now. But as you can see, and this is what made me so popular, because I always kept a record of the buy signals in the past. Imagine buying Bitcoin in this range here. Imagine buying Bitcoin at this range here. Because imagine you buy Bitcoin right there, right? And then the market crashes. Like how many crashes from this entry? It was 1, 2, 3, 4, 5, 6, right? So imagine buying Bitcoin during 6 market crashes. So that's what happens with these accumulation buy signals. With the current system I'm using, uh, for buying Bitcoin, it's not perfect, but it still gives me good commodity results. It's not very professional, but it's manageable. And as you can see, it's risen by 10 points here, so it means it's trending very very well. I'll put another buy accumulation signal, but so far my two buy signals. Imagine buying Bitcoin here, and then you experience like 3 market crashes. So Bitcoin has crashed 3 times from the buy signal. So it's not easy to buy Bitcoin. But today I'm going to end with EUR AUD. Now I want to talk about Pepe. Now with Pepe, there was the entry signal, and this is the buy signal. So it's kind of similar to what happens with Bitcoin, right? Where after the buy signal, you have these market crashes. So Pepe is also similar to that. So the good news for Pepe is there's still time to enter, but you will not buy it at the entry signal, right? You can see the difference between the entry signal and where it is right now, and the buy signal was right here. Okay. So why am I doing Pepe? I'm really just speculating. All right, I'm not too sure. So finally, I just want to end the video with this one. to prove to you that also when you look at the ADX, it shows that it is a middle market, and sometimes you want to buy a middle market, right? So it's very much similar to what happened here at this junction right here. I still remember the signal. It happened, I think, like a month ago, and as you can see, it was during a flat market on the ADX. So right now, the euro currency is not doing very well. And then I was trying to catch the moving average. It's moving on, and it's moving on 100-day moving average. Um, it doesn't look very clear, because I have this here, and let me see. Okay. It's on a Fibonacci retrace of 50. Yeah. So as you can see, it's trading in this channel. So this is at support. So what you want to do uh, is buy at the you want to buy at the support level. Right now, as you can see, if you look at it really close, you can see that it's slanting a little bit, right? So the support is on the 100-day moving average, as you can see. So it's something like that, right? So you want to buy like below support. So these are called this is called the Bollinger Band, right? These are parallel channels. So these are Bollinger Bands, and the strategy is also, it's got a lot of names. Some call it the channel trading, some call it stair stepper like Tim Sykes. May I call it the flagpole? So it's very similar to what happened here in the past. So this is exactly what's happening here, and the euro currency has has not been performing well. Let me show you what I mean. So ideally, you want to buy when the markets crash. If you're trading like the reverse. um, so as you can see, the euro currency has not been doing very well, and it's below the 100-day moving average, which is the 3-month moving average. So these are euro bonds, I think, euro currency bonds. But overall, the euro currency has been appreciating in value. Right, the euro currency bonds have been appreciating in value overall. Right now, as you can see, the euro currency is undervalued, and so that's what makes this one a good play. Because what you want to do is you want to buy the currency when it is undervalued. All right, you don't want to buy it uh, when it is overvalued, because when something is overvalued, and that's the hallmark of a reversal. That's the hallmark of a reversal. You want to buy it when it's undervalued. So it's kind of similar to like what happened here in February, and as you can see from the last dip here, which was in February, it has not seen that price yet. So as you can see, this is the second recovery. All right, so you can see it's up by probably 50%. I don't know, 20%, I guess. So you can see it's up from this point here in February, and we're back here again. So it's gradually falling and recovering, falling and recovering. Kind of similar to what happened in February, right? So we have another market crash, and that's when you want to buy. All right, and that's what makes this a good candidate to buy. So the leverage I've used is 50x. I've used 50x leverage on this one. This looks similar to a rising three methods. Mm, yeah, so I'd love to work. Thank you for watching this video. Please don't buy what I tell you to buy. Don't sell what I tell you to sell. Uh, again, do your own research before you trade anything. And that's why I showed you the books I'm reading. With trading, you have to try your best to learn these things. So probably in the future, I feel like I should start a Telegram group or something like that, where I can just like be giving these signals for a fee. But so far so good. I'm enjoying what I'm doing. I'm enjoying this work, providing to TradingView. So thank you to TradingView. Thank you to you for watching this video. Thank you for the support. Thank you for the likes. Um, I would love to wish you all the best in trading. If I don't reply to your message or your comment, it's not because I'm ignoring you. It's because I'm just so focused on learning that I don't have time to check some of the messages and comments. So just keep commenting, keep sending me those messages, and I'm sure I will read them. And those that I feel are not spam, I will respond to them genuinely. So please don't send me spam. If you genuinely, genuinely want to contact me, you can contact me. I'd love to thank you so much for watching. Take care. Trade safe. Use a simulation trading account. Don't trade with a real account in the beginning. Use a simulation trading account. That's my disclaimer. Trading is risky. Trade safe out there. Take care. Bye and